So when is hard money the best option in real estate investing? That's what we're going to go over today. When is it the best option? You need to know and understand these things because real estate investing is all about being profitable. And today we're going to show you how to be profitable with hard money. When is hard money going to make you money? That's what we're going to go over today and look at, because we always understand there's money in the money. Let's look at the number one way you make money with hard money in real estate investing, and that is speed. And it's best to look at an actual example when we're going through this, because this is a real example from one of our clients. And he was able to buy a property here in Colorado at a $30,000 discount. Why? Because he was able to close in less than a week, where all his competition, there was 5 other people bidding on this property. They couldn't close, so he got a $30,000 discount. When you have speed and you could close quick, that's the number one reason why using hard money is important in real estate investing. He was able to purchase a property for $300,000 where everyone else was bidding $330,000. So right there, he got that $30,000 discount. Even though with hard money, it cost him more than it would with a bank. So he paid $7,500 instead of $4,100 for origination. Interest, if he kept it 6 months, he actually got out of it a little bit faster. But if he kept it the full 6 months, he would pay a lot more interest also with using hard money over a bank. And some of the fees, the appraisals, the underwriting were actually cheaper in that case. What we wanted to show here is just on the loan cost. If you just looked at the loan cost when you're looking at transactions, you would see that he paid a lot more money using hard money over a bank. He actually paid almost $8,000 more for this property using hard money over if he had the option of doing the bank. And that's typically what you find is when you're dealing with speed, you don't have those options. But let's look at the full cost of this transaction for him, because he was able to buy the property for $300,000 instead of $330,000, because if he was going to use a bank, he was going to take longer and they were not going to take a discount. So in real estate investing, it's all about negotiation. It's all about the buy. You want to get the least amount upfront, the purchase that you can, because as you can see, he still made more money using hard money over a bank because he paid less. As we said before, his costs with hard money were $23,000 compared to $15,000 if he was able to use a bank. The total, when you add the $300,000 in his purchase, plus the cost for the loan for hard money, was $323,000. You compare that to the bank, since they had to pay more or would have had to pay more, that was $330,000 plus $15,000, so it was actually he would have ended up paying all in just on the purchase and the loan, $345,000. He saved $22,000 by using hard money and being able to close really fast. The truth is, using hard money for speed even works with even a smaller discount. What I did is I put some numbers here together. You could go all the way down to a $10,000 discount by closing quick and still come out about $1,100 ahead of the game by using hard money. And the thing here is also, when he was able to buy that property, he had another deal. He had another profitable deal. So even if it was just him buying it for $310,000 compared to $300,000, even paying all the fees for hard money, it still would have been cheaper. Plus, he would have got the deal. Because remember, when we were talking about this particular transaction, he was bidding against 5 other people. If he wasn't the fastest using banks, if he wasn't the highest, he's not going to even get the deal. Hard money allowed him to close quick, which gave him the deal, which allowed him to make more money just on a flip itself. The second biggest reason to use hard money is credit score. Hard money lenders are not typically credit score driven. Yes, they'll probably look at your credit, but it's not based on a score. Maybe you have a 620 score just because your usage, you're using all your credit cards for your projects. You have to put all the materials, everything else on your credit, and it actually lowers your credit score. Hard money lenders typically don't worry about your credit score. They just worry about your credit. Do you have a bunch of lates? Are you defaulting on a bunch of things? That will negatively affect you with hard money lenders, but not credit score. So if you go to an institutional lender, private equity, or bank, they do have credit score minimums. And if you do not meet that credit score, they're not going to give you a loan. Hard money will allow you to take out a loan even with a low credit score as long as it's just something like usage or thin credit. Thin credit just means you haven't had credit for a while, or you don't have that much credit. Maybe you just have a car loan and a credit card because you don't own a house yet. Thin credits will also impact your credit score. Hard money lenders, most of them will look at the actual credit and not just the credit score. And also, we're very flexible on one-time events. There was a medical emergency. You had to help someone else out. You had good credit before, there was an instance, and now you have credit again. Those things will work with hard money, which they typically don't with banks and institutional lenders like private equity firms. Hard money is also flexible. If you're looking for someone that's more of an out-of-the-box lender, maybe it is a unique property in a unique area. Maybe it's a dome house. Maybe it's an old manufactured. A lot of the larger private hard money lenders, Civics, Finance of America, they do not lend out of large cities, which they call MSAs. If you are 20 miles or 30 miles out of Oklahoma City, they may not lend to you. Especially if it has a rural zoning, they're not going to look at it. Like here in Colorado, you could go up to the mountains and you could be right near a resort, but they may not lend to you. They have criteria that has to fit in their box. A lot of smaller banks do too. They will only lend in their particular town or their particular region. Hard money is typically a lot more flexible with unique properties, out of MSA, working with cross liens. Maybe you don't have enough money to put down, but you have another property you own free and clear or has a lot of equity in it. And that way, a hard money lender has more flexibility in maybe putting a cross lien on another property instead of having money come out of your pocket. Because every time money comes out of your pocket, it hurts you as far as doing another project or just that cash flow making the payments. Gap funding. If you're looking for someone to maybe come in and finish a project, this is the flexibility that hard money does, and even lot splits. You buy a house, it has an extra lot on it, but it hasn't been split off. Using a traditional lender is actually splitting those off is a lot harder than using a hard money lender that is flexible. We would be flexible if you had a property that had an extra lot on there, and it's going to take some time to get the survey, everything done. Split that off, sell your house, and still have a lot. That's where you use someone like Hard Money Mike. Here's another big reason why you use someone like Hard Money or Hard Money Mike, hard money lenders, is zero down BRRRRs. If you're looking to get into BRRRR transactions, which are the rental properties, you really need to find someone like a hard money lender or a private lender who will let you lend up to the 75 to 80% of the after repair value. Remember, with the BRRRR strategy, it's always buying under market valued properties, purchasing them, then refinancing them with a longer term loan. But when you get into that longer term loan, when you do that refinance, you really want to use rate and term over cash out because you get more money, it's cheaper, and it's easier and faster. If you have a hard money lender that when you buy that property will lend you the money, the purchase price, the rehab, up to that 75 to 80% that you can refinance out, it saves you money, it costs you less in interest and in points and fees, and even the timing, because you don't have to wait on traditional loans for 6 months to do a rate and term like you do a cash out. If you're looking for another reason to use hard money, when you're looking to do a true zero down BRRRR, that's where you use a hard money lender. Typically, people are going to use hard money for speed, flexibility, and the zero down BRRRRs, but there are other reasons that people use hard money. Like banks will limit you to 2 to 3 projects. Maybe you've used all of the funds you can with the bank or the institution, and you have another transaction you want to take on until something's paid off, or like a bridge loan until that happens. Maybe it's a project you need to keep off your credit because of other business reasons. You can't affect your credit. Maybe you're applying for other loans and you don't want this to show up in your credit. Hard money typically never shows up in your credit. Maybe you're just starting out and you need that 1 to 2 to 3 projects completed to get into institution or bank funding. Maybe you complete a project, like I said, maybe it's a project that's already started. A lot of lenders, institution and banks don't want to lend on a project that's already started just because of mechanic lien issues and stuff like that. That where gap funding bridge loans would best be suited, for a hard money lender. Or it's a project that you want to get into, you just want to purchase, you want to do your own repairs, and it's maybe using credit or other unsourced funds. That's where hard money has that flexibility. Hard money has its uses. It's really great for flexibility, speed, the zero down BRRRRs, and other special categories. It's not for every project, but in real estate investing, especially when speed is important to get that best deal, that's where hard money really comes into play. We're here to help you become successful in real estate investing. So if you have a question, there's a couple ways you could reach out to us. Every Thursday we have a call-in where we go over deals, we can look at your transaction, and you can just ask general questions along with other real estate investors. Or if you have a deal right now, just email us, call us, or put a message below. We'd be glad to help you make sure you're using the right leverage for the right deal to make sure you profit on your next transaction.